have the daily price chart for Tesla Incorporated, stock ticker TSLA. So as we can see here, we've probably got one of the best examples of a positive start to the trading week amongst any of the major, large cap tech stocks. I've just finished videos on Meta platforms, Apple, Microsoft, Google, and for the most part, what we're seeing here is we did see an initial pop in the top to the top side, but those gains have been somewhat short-lived, and many of these stocks are already starting to come under a bit of selling pressure. As we know, recently Tesla released its most recent earnings report. Overall, the market response to this report was not favorable. We're already seeing some fairly significant price gaps to the downside. And as I've mentioned in previous videos, what this really caused to happen was this downside break of a symmetrical triangle pattern, a period of consolidation, which could have ultimately developed into a bull flag pattern had these price declines not occurred. We can't say that at the moment because a bull flag pattern would have to break out to the top side. But if we see a downside movement here, that's not going to, it's going to invalidate the pattern, and it's going to suggest that those projections are not going to be likely or probable. So, what we're seeing at the moment here is this downside break of this prior symmetrical triangle that we were watching in previous videos. But currently, we do have to sort of focus our attention further on the downside here because the most recent support levels that have developed are now coming in closer to the 215 mark. So we can kind of drill in a bit here and take a look at the 4-hour price chart to see this activity a bit more closely. So currently, as we can see, in the similar activity was being seen on the daily chart here. We were seeing this rising purple line, which is the 100 period exponential moving average. This line is a bit more important on the daily chart because the daily chart is much more closely watched than the 4-hour chart. But as we can see here, these moving averages are roughly similar in their current position. Which just below 215, and this does seem to be bringing a bit of extra support to the stock. So the real question here going forward is whether or not this 215 mark is the ultimate price low. Prior support levels were being seen at 233, and we currently have this fairly significant price gap here that still does need to be filled. We're sort of doing some of that work here with this latest move to the top side. But this gap is not going to be filled until we reach closer to roughly 245.80. So we're currently trading just above. It's roughly 232.20 at the moment. So there's a fair amount of movement here that would still need to occur before we can say that this downside price gap here has been filled. So, looking forward a bit here, we can see that, there is some very significant event risk that's currently trading on the economic calendar for this week. 4 of the 7 Mag 7 stocks will be reporting earnings this week. That would be Microsoft, Apple, Amazon, and Meta platforms are all reporting earnings. So this kind of closely follows the release that was made public by Tesla. And here we can see, the size of the negative reaction that was seen after that report was released. So, and this was really just one report. So, if we're dealing with 4 out of the 7 Mag 7 stocks coming up this week, it does stand to reason that, the potential for market volatility here is increasing. If you look at some of the other videos that I just posted for those other Mag 7 stocks, the ones that will be reporting earnings this week, we can see a bit more of a negative or at least uncertain situation in those price charts. The upside price movement in Tesla really has been more forceful than just about any other, any other stock that I've covered anyway. And I've already done about 7 or 8 of these videos today. So, most of these stocks are, we did see an initial pop, but they started to trade under selling pressure quite quickly. So, this can be attributed most likely to 2 factors. One would be the fact that, broader share prices, in the S&P 500 and in the NASDAQ, and definitely in the technology space, have been trading lower under a fair amount of selling pressure. since, roughly over the last 2 or 3 weeks. And these movements have been significant. They've led to some major share price destruction and some, major changes in overall market cap for many of these companies. Um, but at the moment, I guess we could say that the main Tesla specific event risk has now run its course. So we have seen Tesla's earnings report. So that's not a factor that can really influence the stock going forward. The only real issue here is going to be how these other stocks and how the broader market sort of affects this current rally higher. At the moment, what we're seeing would be highs of this would be 234.27 would be the high from the Monday, July 29 trading session. And as you can see here, we are now coming into contact with this falling 20-period exponential moving average on the 4-hour chart. That would be this yellow line here. So we could start to see a bit of a resistance there, and then also just in addition, we could see additional resistance based on the fact that so many of these other tech stocks are already starting to show declines. You could make the argument that this price destruction for Tesla has already been seen. That maybe that's already in the rear view mirror. That's a completely valid and reasonable perspective to have here. But given the broader state of the market and the fact that there are so many stocks that are going to be releasing earnings this week, all this does is increase the level of uncertainty, and the potential for volatility in both directions. I mean, we could see, it's possible that we could see positive earnings numbers from all four companies. But in my view, what we're going to need in order for these technology stocks to continue moving to the top side is most likely, an upside surprise from all four companies. I do think that if we start to see some mixed results here, I think that the broader market is going to start to sell off. And then the real question will be whether or not Tesla can sort of weather that storm. You can make the argument that the selling activity has already occurred. So there's not much more selling pressure left in the market that's likely to be devoted to Tesla. But that it is still a bit of a wild card at this point. And this will most likely continue to, generate uncertainty and unpredictability for the stock as we move forward this week. So here's the current market analysis for Tesla Incorporated, stock ticker TSLA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.